Hello to all of you, our dear subscribers. FutureTrend channel is glad to welcome all of you today, and today is 14 May 2019, and FutureTrend channel is ready to present our point of view of how to trade major currencies in the world financial markets at the moment and in the nearest future. As regarding today, the foreign exchange market and the behavior of market participants is under control of the trade negotiation process between the United States and China. As you know, last week, United States decided to impose higher tariffs on imported Chinese goods, and in retaliation efforts, Chinese side also decided to impose higher levies on 60 billion United States goods that's import to China. And of course, it does not bode well for the risk appetite in the market. As you could see, such kind of currencies like Swiss franc and Japanese yen, preferable safe haven currencies, are in the strong demand right now. As regarding the dollar yen is looking a little bit buoyed at the moment. It's retreated from the lows registered during previous trading session around 109.01, now trading around 109.66. But to say the truth, the situation is not so reliable for the reversal of the dollar yen right now. And that's why we suggest that any kind of pullbacks to the level of 110 should give you an opportunity to enter short positions. And that's why, by the way, as you could see, we are ready to sell the dollar yen at 110, and we are ready to add to the position at 110.95 with a stop at 111.25. To say the truth, moving average 200 daily line is a little bit higher, around 111.45, is a little bit higher than our stop loss at the moment. So for those of you who are more risky, we suggest to put the stops to above the level of 111.50. Anyway, as you could see, we are trading below already broken uptrend line, and we suggest that situation is not come down absolutely until the final agreement, and probably this final agreement will be signed during the J20 meeting in Osaka at the end of June. Probably only then the Chinese and United States leaders will finally sign a kind of trade agreement. But okay, at the moment the situation is not so certain, and that's why we suggest that the market should be depressed because of risk aversion sentiment, probably not rising but stable. And that's why we suggest that Japanese yen and for example Swiss franc also will be in the demand, as we suggest, till the situation will clear to the end. And as you could see, by the way, the dollar Swiss yesterday reached the level of 100.50. The situation here is not, from a longer term point of view, is not dramatically bearish for the dollar Swiss. Anyway, we suggest that the time now is for selling the dollar Swiss, probably to any upticks to the level of 101.25. You could put a stop above that level if you enter any kind of short position in the currency. The same applies, by the way, for the Euro Swiss. Euro Swiss also at the moment is not looking very bullish. And by the way, as you could see, we broke below the level of 113.50, which was a kind of intermediate support level in the currency. And also during previous trading session we broke below 200 daily moving line, and which is really very important, closed below that level on a daily basis. And that means that probably now the situation is more bearish for the Euro Swiss than bullish. Anyway, let's see how the situation will develop, because we should understand that any kind of move to the level below 112 should present you a kind of interim point to enter bullish position, because we suggest the Swiss National Bank still in the market. And the last, by the way, the last information regarding foreign exchange reserves of the Swiss National Bank also confirmed such kind of scenario, that S&B constantly buying any kind of important Swiss crosses in the foreign exchange market, like for example Euro Swiss or Dollar Swiss. That's why, as we suggest, Dollar Swiss and Euro Swiss for the last couple of months looked so buoyant. Let's see how the situation evolves regarding the commodity block of currencies, where Australian dollar is probably most sensitive currency to any kind of news regarding the trading negotiation process between the United States and China. And that's why, because of deepening, let's say, deepening situation, worsening situation regarding the future trade relations between the two economic superpowers, that's why the Australian dollar is looking so weak at the moment. Anyway, from a longer term point of view, we suggest, and especially in case of final signing of the trading agreement, the potential to rise for the Australian dollar will be quite interesting. But once again, while below 200 daily moving line, which today is located around 71.55, the pair should remain under the selling pressure. New Zealand dollar is not looking so weak like Australian dollar, like its brother from a neighboring country. Anyway, we suggest here that any kind of further pullbacks to the lows registered just after the last cut by the Royal Bank of New Zealand, announcement of cutting its interest rate, and that lows was printed around 65.25. We suggest that any kind of a retesting of these lows should give you a buying opportunity from a longer term point of view. As regarding, for example, as regarding euro crosses, at the moment we don't have any kind of position right now. As you know, we closed our position with profit in euro sterling, in euro yen, and now we prefer to stand aside because the situation is not so clear. As regarding economic calendar, today is a publication of the German Economic Institute ZÜV regarding economic sentiment in the Eurozone as well as in Germany, and also pay attention on the industrial production of the Eurozone, which should be published at the same time of 8 o'clock on Greenwich time. Commodity block of currencies, here we were stopped out from our long position in the Australian dollar. We lost around 50 points. Now we prefer to stand aside because of unstable situation with commodity block of currencies. We should understand that the Aussie dollar should remain under the downside pressure, because we know how dependent is Australian economy on its Chinese counterpart. And also the Kiwi dollar probably should remain under the same circumstances. As regarding dollar Canada, dollar ruble, a lot will depend, of course, on the oil price market, but here the situation also is not so clear. Let's see, by the way, the situation with the Russian ruble, which is looking against the United States dollar quite stable at the moment in the range below 65.60 and 64.90, let's say 70 points range, starting from beginning of May. And at the moment we suggest that from a point of view of longer term speaking, let's see the daily chart of the dollar ruble. We suggest that besides of any kind of other fundamental factors like the policy of the Russian central bank or the evolution of world oil prices, here the technical situation should remain probably a bit more bullish for the dollar ruble, while we are trading below this important support zone of 63.60, twice retested during this year, during March and April. So now probably any kind of pullbacks to that region should give you an opportunity to enter a long position in the currency. From a longer term point of view, probably we moved from the range of 65.70 to the range of 70 per to the range of 65 per 60. Anyway, as you could see, and now we are again above the level of 65, and that means that the situation at the moment is once again more bullish for the pair. Probably the same applies, by the way, for the euro ruble. You know that the level of 74 a lot of times was a kind of important support zone, but now we are ready to retest at that level. That's why, as you could see in our vision, we suggest to enter a short position at the level of 74 in the euro ruble. At the moment, that's all, our dear subscribers. Tomorrow we will be back to you the same time in our Russian version. Thank you for all of your support of our channel. Bye bye for now.